In this session, a leading fintech innovator and a senior executive from traditional bank. The panel will discuss the following influence of the fintech on the financial industry. The session offers a unique perspective from both disruptors and incubators in the financial sector, providing a balanced view on the opportunities and challenges of fintech adoption, especially in the traditional banking models. So let's hear from them how AI, blockchain, and ML-driven innovations are really changing the banking.
All right, guys, thank you so much. It's been a pleasure. We've got some great panelists, probably they say they keep the best for the last. We're looking forward to have this conversation. Without further ado, I'd straight away ask each of the panelists to actually introduce yourself. Got about 2 minutes on time check, so let's be gentlemen and give the lady the chance to go ahead.
Awesome.
Laura,
Yes.
the floor is yours, please.
Thank you very much. You know, that's one of the industries where it's beneficial to be a woman. Let me introduce myself. So I'm Laura Cornelia Medinova. I'm Chief Ecosystem Officer at Gate.io. Gate.io is one of the largest crypto exchanges at the space. And I'm also principal at Gate Ventures, the venture arm of the exchange, where we invest our own prop capital into early stage companies. Mostly we do crypto, anywhere from seed, pre-seed to Series A. We're focusing in different verticals, anywhere from infrastructure to payments. Now we're very actively looking into stablecoins as well. And yeah, happy to be here. Happy to be with such a rock star panel of gentlemen.
Thank you so much, Laura. Welcome. Let's have Chris, please.
Hi everyone, Chris Pinkerton. I'm the Chief Growth Officer at Flybits. Flybits is a Toronto, Canada-based fintech. We help banks mobilize their data into experience design to deliver personalized financial experiences. We work with banks all over the world. We have investment from MasterCard, TD Bank, Citi Ventures, Bosch, and Point72. We're a 12-year-old company, and in the region we work with Fab, Dubai First, and in Riyadh, Al Rajhi Bank.
Hi everyone, this is Namir Khan with you. I'm the chairman and founder of the MENA Fintech Association. So it's amongst the top 4 fintech bodies globally. We have 26,000 members working with central banks, policymakers, regulators, and the wider ecosystem, all the way from Morocco and Oman, anything in the middle, which includes 22 markets, with a very strong presence, as I mentioned, in different markets all over. My second hat that I wear is I'm a founder of a fintech called Phils. So we do basically infrastructure for enabling carbon markets. And third, on the academic side, I'm on the board of Edinburgh Business School.
Thank you.
Thanks, Namir. Sardar Ahmed Durrani. I'm the head of investments for GDA, one of the largest Bitcoin miners globally. We have a family office here based out of Dubai as well. I, like Namir, wear a few hats as well. So other than the family office, I'm also an angel investor and at the same time, ex-PE professional. So I still advise on my old, part of my old colleagues.
Thank you so much, panelists. Indeed, it's a pleasure. Let's start off as soon as possible with Laura. The buzzwords are all spotlighting on you tonight. Everybody talks about cryptos, everybody talks about investments, everybody talks about what's happening, especially after the sudden, fall in all the cryptocurrencies across the world. So, Laura, with your expertise in this ecosystem, being a part of this, not just in Middle East, but globally as well. So, what's your take on the current crypto market? How do you think investors like us in the crypto market should be actually looking forward to?
It's a very interesting question. You don't know how many messages I got even today from my friends. They're like, crypto just went down like 20, 30%. What do we do? Do we sell? Like there are so many panic sellers. And I'm like, it's a regular day in crypto. One day your portfolio is up 10x, next day your portfolio is down. You're thinking maybe I should apply to work for McDonald's. But jokes aside, right now we're entering in a very interesting era because crypto is still correlating to global markets. And as you know right now, what's happening, especially in US with tariffs in the stock market, the times are going to be very, very tough. We had a call today with our analysts at Gate Ventures, and unfortunately, predictions are not doing good at all. We are probably heading into recession. We're probably heading into end of globalizations and countries being basically on themselves rather than trading to each other, and that will reflect crypto market as well. So now as a fund, we're mostly looking into stable coins, as that is still one of those narratives that everyone, doesn't matter how the crypto is going to perform, going to be using. So stablecoin applications, yield-bearing platforms, issuers, and so on, because even though crypto is going down, stablecoin usage is actually with every month increasing. So that's one of the narratives we're looking into that's very hard right now. Number two, we're definitely looking into bringing more liquidity. The issue is this market, why crypto is not rallying as everyone was expecting to have a huge bull market, is that there is not enough liquidity. And right now we don't have that many Web 2 people coming into Web 3. So we're looking into solutions that would bring that Web 2 to Web 3. And that is usually something consumer focused, from banking, DeFi, to even some IPs. So it's all about bringing that liquidity. And number three is institutional adoption of crypto. So right now, more and more, not just governments, but corporates are introducing crypto as a technology into their everyday lives. So we're very much looking into the companies that can facilitate that. So that could be infrastructure, again, solutions for banking, for wealth management, among others. So here we're more focusing on B2B SaaS models rather than B2C. So I see these three narratives plus RWA, I can talk about it later, are something that still could potentially bring some yield, even though the markets are very, very turbulent right now.
Thank you. One quick question for that. We're in the world of AI, and of course, a lot of crypto ecosystems use AI as a powerful tool to do predictions. But then, are we indicating that AI can go wrong?
Can go what?
AI can go wrong by
Can go
predicting the tank. So yeah, this is my question now, totally to you. And
Well, I can start and then others can take over. Can AI go wrong? I mean, depends on developers. We definitely need some ethics committees to make sure that whoever is creating new LLM models are doing it ethically.
Right.
But in the end, it's more about the individual people and how they're going to program it.
Perfect.
We are not investing that much into AI. We think it's just a narrative and a buzzword in crypto.
Okay, thank you.
So one of the biggest theses that we've seen recently across all trading platforms, be it TradFi, be it equities, normal equities, or our own meme coin surges that we've seen as well. Trading happens on sentiment analysis. AI cannot do sentiment so far. So AI predictive models, which tell you where the market's going to be, are still very nascent.
Yes, okay.
So most of the larger shops are not using AI because exactly like what happened yesterday, and it's still happening, it's sentiment, and most of the paper hands are dropping cash right now, or dropping assets right now. Diamond hands, as you know, are guys who've been doing this for a while, are literally hoovering up. So when we look at wallets right now, you'll see large whales hoovering up equities or tokens, whereas diamond hands or paper hands who had just bought at 80 or 100 are just selling.
Agreed.
So it's all sentiment.
Okay, thank you. Chris, can I bring you in? I'm sure with the conversations we've had before, it's very levitating to hear what your company is doing. So could you kindly shed some light on how AI is transforming customer experience from your perspective?
Yeah, we're working with banks around the world in deploying data-driven use cases so that they can create more automation in their business, but also deliver a more personalized experience. But the premise that we follow is that data is a new asset class, so you need to think of data that way, but trust is the currency. And so the auditability of any models that you're using is very, very critical in how you're going to apply it in a customer-facing scenario, because trust is the cornerstone of a banking experience. Where we're seeing the application of AI is in the expansion of how they're using data today. So most banks use things like predictive models. Predictive model itself is not technically intelligent, so it's not AI, but if you add a machine learning module to that, so you're predicting an outcome, and then you're testing that outcome in real time, and you're using the performance of that outcome to determine whether that prediction was true and what percentage it was true, augmenting your model and then deploying again that predictive analysis. That's truly the intelligence layer that a lot of banks are starting to deploy today, but it's still a crawl, walk, run scenario, even for some of the largest banks in North America as well as in Europe. It's about an application of a use case. Most banks are looking at it in two different forms. One is how can we create more productivity in the business? So you increase profitability by improving your workflows and the operational demand. The other side of it is how can we drive revenue? So how can we surface the right product at the right time to the right customer in the right channel, but do it in a way that's not disruptive, do it in a way that's contextually relevant. And that's the biggest thing that we're seeing in the deployment of AI that we're trying to deploy is contextual computing. It's taking all the data attributes, contextualizing those attributes so that you drive a high relevancy of the experience or the message that you're delivering to a banking customer. That creates higher engagement, higher trust, and higher outcome for the bank overall.
Thank you. Thank you so much. Namir, Chairman, Meena, FinTech, powerful, branding. So let's talk about, I think you might be having, and you might have experienced probably the vast amount of use cases in terms of AI and ML in the ecosystem. What stands out in the MENA region to the rest of the world, or share us some of the use cases, please?
Thank you. So in terms of the use cases that we've seen lately, so you see, when it comes to AI, as mentioned by Chris, the hyper-personalization, the biggest use case is what you see in your daily banking apps itself, right? There's the hyper-personalization happens, of course, when you are leveraging AI tools. Secondly, beyond banking apps as well, your everyday consumer apps as well are leveraged by AI as well. I was speaking with our friends in Kareem as well, who are leveraging AI they're using GPT for the smallest amount of use cases to identify they may not ask you, for example, for your religion, which your religion is when you're basically onboarding yourself to the app, but based on your I would say interaction with the platform, you're able to identify where the customer is actually coming from in terms of culture as well. When it comes to machine learning, fraud has been one of the biggest issues for any industry, be that banking or be that crypto. Again, ML has been one of the biggest, I would say, accelerators in terms of trying to reduce the amount of fraud that is happening. So from the banking perspective, I've seen banks adopting AI-powered ML solutions that help them reduce the amount of fraud. And third is going to be, let's not forget, AI and ML together potentially also helps regulators a lot. So whereas you see banking platforms and daily consumer apps and different platforms leveraging AI in different forms in different ways, similarly, regulators I've seen personally are leveraging AI tools when it comes to SUP tech, supervisory tech, in order to not just have a very strong and stringent supervisory, but at the same time reduce the amount of fraud that may potentially happen and ensure compliance when it comes to the markets.
Thank you. That's some phenomenal growth in terms of adoption into AI. So let me put the spotlight back on Durrani. Let's talk about the stumbling blocks in implementation in banks, microfinances. So what's going on, and how do you think the ecosystem can actually leverage AI to full capacity, like how Namir just spoke about?
No, very good question, because unfortunately banks by nature are dinosaurs, and we say it in the industry again and again. I'm a banker myself. I've been at multiple banks before in the region, from Hong Kong, Singapore, all the way to in the Middle East as well. And banks move slowly by nature of the beast, because regulation is stringent upon them. It requires them to move slowly so that if they mess up, they don't mess up too much. By the same nature, governments have realized the power of machine learning and blockchain, which really disrupts these dinosaurs fairly quickly. Your payments get faster, your compliance processes get smoother, your onboarding cycles get much, much faster. Your cost goes down. So one of our portfolio companies, for example, Namir knows about this, is a AI company that literally does collections. We spoke about this as well. One of yours does the too. So 30 days past due, 60 days past due, 90 days past due. No human will call you. Our AI literally calls you and says, in a human voice, any language across the world, with the ums and ahs of any language, says to you, hey, is your check on the way? Because we haven't received this. Now we're seeing that most of the NBFIs, non-banking financial institutions, who are also integrated with that structure, are adopting this technology as well. They're doing pre-qualifications. So banks are too slow. Banks still say, oh, our licensed individual must come to your house and have a signature on a piece of paper. Thank God they've gone from paper to a tech device. But most of the MBFIs and the fintechs are saying, hey, forget that. Our AI will call directly, pre-qualify, and only qualified customers will be passed on directly. So banks by nature there's 4 or 5 main stumbling blocks, coming back to the question. Technology and adoption of it, and how to integrate it. So companies like Chris's are helping, or some of the portfolio companies we've invested in are helping, but by and large, the banking bureaucracy is slow to adopt.
Okay, what you just said right now has a lot of value, because if you look at Namir's ecosystem, where he has young entrepreneurs coming in with fintech, and you have legacy, seasoned professionals sitting as a decision maker in banks, right? It's a clash of titans.
Yes.
If you understand where I'm going.
Yes.
Then you have even more smarter people in the crypto ecosystem. So if you look at 3 different segments, all of them trying to actually stand out and say, no, it is our decision that's going to make the market and break the market.
Yeah.
So if you look at it, I think, Durrani, as you said, these can be, this generation gap can be probably one of the biggest showstoppers currently.
This is the decisive moment in history when actually banking actually decides whether it's relevant or not. Luckily for us...
Well, why does banking have to decide?
So it's not banking. I was about to say, luckily for us, the regulators have stepped in.
Okay.
So one of the things that I was going to hopefully talk about later in the afternoon as well, but I think I'll just mention it now. With Trump coming in and saying, hey, you know what? Both parties have agreed, so Biden's whole party and these guys agreed that we're pro-crypto. Before they announced pro-crypto, we as GDA, as Bitcoin miners were worried. We were like, okay, if they come in and put a tax on our Texas assets,
Got it,
where are we going to go? We were going to Saudi, we were going to other places. As soon as Trump came and said we're pro-crypto, the amount of phone calls from sovereigns we're getting is, hey, can you come to XYZ country? I'm not going to name them, but more than 10 countries have come to us and said, we've got these electricity assets. Can you come and do Bitcoin mining here? And that's not just Bitcoin mining. Now the regulator is saying, okay, payments phase, okay, crypto trading, onboarding cycles. Can we now allow these blockchain boys to come and really shake the tree on the banks? Because the banks, unfortunately, my own old bosses and my own colleagues are sitting there on laurels, which is only one thing, balance sheet. But now the sovereign's saying, I'll give the balance sheet to the fintech boys if you can't pull your socks up.
See,
so now everyone's...
That's very interesting, because that correlates to Laura's ecosystem, because Laura comes from an ecosystem where they need to invest to help these blockchain boys actually execute. So putting your suggestions back and turning it around to Laura, what are the 2-3 major criteria which actually puts pen to paper, or in fact pen to check, in this ecosystem right now?
So before I answer this question...
Sorry, I think I should say you can transfer through Bitcoin, so forget about it.
Well, in the current market, maybe that would be the good case. So before I answer this question, I want to kind of have this open debate, maybe. So as you were saying before, that banks need to make a decision whether they're still innovating and kind of going where consumers wanting to go, or startups will take over. Yes and no. Because look, Revolut is one of the kind of oldest fintechs. I knew the guys when they had like 15 people in Vilnius office, because I'm from Lithuania and that's where they got their original license. And look what's happening with Revolut right now. They're becoming a bank. they were known for easy onboarding, especially for companies, easy support. They're not that anymore. They're, with every year, they're becoming more and more scared of losing their license, being in the wrong grace of the regulators, and they're becoming the bank. So with this kind of trajectory, in 5 to 10 years, they're gonna be the next Barclays. So I would say while you're small as a company, you can have a lot of leeway, you can be a bit more open, accepting high-risk clients, you can be more open with your marketing. But once you get bigger and your balance sheet becomes big, you start to care about balance sheet the same way.
Yeah,
So-
no, I agree. Exactly, that's why I mentioned when the regulator says that I'm going to pass on my balance sheet to the next big ticket, then things become different. So the only thing that has become different from when Revolut took that decision is that now the sovereigns are saying we need to step up.
I'll bite on this debate as well because, Durrani, you made a point earlier about banks are dinosaurs, but when a dinosaur takes a step, it's a big step, right? And so that's an important point because when you're trying to deploy data, you have to have data. So that's very important. You need to keep the privacy preserved of the customer data that you have. Using large language models is not going to do that. And so you want to train on your own data and build your own intelligence internally. And a lot of the larger banks in North America that I'm seeing are disrupting themselves. They're allocating capital to create their own startups, and they're creating neobanks that are challenging their own business models so that then they can transfer over those elements. And so just because you are a legacy bank and you have old protocols, old workflows, old processes, does not mean you don't have the asset strength and the data strength to be able to pivot and take a huge step forward and disrupt yourselves in the process of evolving.
And actually, I think that's a very good way to do business because if it's a legacy bank who withstand all the financial crisis, everything, they have the reputation, of course you want to trust them rather than a startup with maximum EMI license that probably not even insures your deposits. So even though I'm all for innovation, it's still very early when it comes to fintech and banking for it to be mainstream and compete with the largest banks. And if the largest banks will invest millions, if not billions, into creating their own startups, of course they're gonna outcompete just because people will trust them. But I see someone wants to probably disagree with me.
No, I don't want to disagree. I think we're all saying the same thing. What we're missing the point here is it doesn't have to be one or the other. It's simple. The simple matter is banks have to mature. Banks are mature enough to understand that they're being disrupted, and the technology exists right on the outside. So exactly what Chris said, the banks have the database and the balance sheet. The technology is right outside their door. Now, one access is when they invest into those companies and let them challenge them, or just in-house it, bring it in, actually innovate. So I think we're all saying the same thing, that things have to move, but coming back to the old stumbling blocks, regulators now on board with you. Incumbent systems is a bigger issue than anything else. Old school IBM machines that we were talking about are still sitting in banks.
Finacle.
Core
banking.
Core banking systems is just it's the biggest bottleneck available in the market right now, and IBM is now being thrown out of every large bank. And we're all talking about newer systems coming on board.
Look, I have to warn you though. A bank which has invested multi-million dollars in creating this ecosystem, right? It's not easy to rip and replace with the new technologies. That's the fear, because who's going to bell the cat is what's going to happen.
So I'll tell you, I'll just jump into this. I'll also take a bite.
I have another bite. Take a bite of that.
So we have seen this. We have had this debate probably 5 years ago as well, where fintechs are competing with the banks. Will this work? I think it's an old debate. It can't work. And fintechs, if you pick up any fintech that is successful today, has one way or the other been riding on the rails of a bank. The successful ones.
Customers are with the banks.
Yeah. No matter what happens, fintechs have done a fairly great job. Yes, they have innovated, they've built, I would say, amazing brands as well that are great successes today. But the success has been one way or the other powered by a bank. How many fintechs, pick up the number of fintechs today in the market that had raised stupendous amount of money, but they didn't go live? or they were struggling to go live for 5, 6, 7 years, raising 25, 30 million dollars, haven't really achieved any amount of scale. Why? Because eventually they were looking to, or they were struggling to either tie up the partnership with the bank, get a banking rail, get a BIN sponsorship, etc. So banks do play a critical role. I think it is the eventually what is important. I will just come to the point in terms of what needs to be done is also on the onus of the fintechs as well. Banks may be dinosaurs, but then fintechs have the responsibility to then either strike a deal. Second, know how to speak to the banks. That's very important, right? Because many of them struggle when they're speaking with the bank. Third, if the banks have a dinosaur tech, your tech needs to be compliant to work with a bank. That is extremely critical. In our experience as well, when we had built our tech, I was initially scared to go out to the bank and say, hey, we're using blockchain. I actually waited for the deal to be signed, and then I go to the CEO of the bank and say, oh, hey, we're leveraging blockchain. But to my surprise, the day I did that, and it was exactly 5 minutes after the signing, because we were here, I'm like, hey, can I speak to you for a minute? I need to tell you something. When I told him that we're using blockchain, he was, in fact, it was a very different response. He's like, it's brilliant. I was thinking about it a few days ago, and I actually love this use case. So it's how you speak to the banks as well. And lastly, when you're establishing your architecture as any type of fintech or even a Web3 fintech, Web3 company, is how seamlessly you can integrate with the banking, core banking technology. However, I saw still, when it comes to blockchain, I saw a dearth of awareness when it comes to banks. Some of the biggest banks still are not aware of how this technology works. So that's a gap that I've seen. I won't tell why there's a gap or why they can't understand. That's their problem. But there's a massive gap that I saw that they did not understand how this blockchain piece works.
Namir, just to add a little bit of spice on that, whatever you said right now, can a fintech complete the settlement system of payment without using a bank?
If they have the licenses, yes.
No. If they have the license, they've come into the category of regulation. Now, as a fintech,
then you're looking at money laundering.
Exactly. So it's not possible, right? So as already
it's possible,
said,
but not legit.
not legit. So let's talk about the legit part here. So here again, I think Durrani's message was coexist. That's the framework. We got to coexist.
If I
Am
can
right?
give 2 examples.
Yeah, sure.
So, a category
Legit, yeah.
legit examples. Category 3 licensed blockchain company out of Hong Kong has recently moved to AGM. Proud investor. It's a private banking for crypto. Crypto boys will say, boys and girls would say, there's no such thing, right? But this is exactly what they're standing for. They're saying, hey, all you people who don't understand crypto, who can't have their keys stored and who are scared of this, how do I open this account? Who do I go to? Smoke and mirrors. Come to us. I won't name them because I don't want to be shilling here. But that platform says, we will be your one-stop shop.
Yeah.
Backed by a large Swiss, again another bank that I won't name, large Swiss private bank, backed by them, backed by a global large PE fund, multi-billion-dollar PE fund, who said, you know what? We can be the front of asset managers, family offices, large-scale allocators who want to get into crypto, come through us. Tomorrow,
Brilliant. Yeah.
Coinbase Asset Management is flying in to partner with them for distribution in this region.
Excellent.
So they're crypto, they're using AI, they have category 3 license ADGM, and they partnered with one of the largest private banks, backed by a largest PE firm, and they're making that difference right now.
Leveraging blockchain.
Leveraging blockchain and AI.
Brilliant.
So examples are there. It's all about who takes that step first, and it all stems from regulation, like you said. Luckily, we're in UAE, where regulators saying, go try it out.
Yes.
If it works, let's do it.
So if you come back to Laura, the question still is pending. When are you going to, pass the money across the blockchain? What do you see in those companies? What do you see in those new fintechs, etc., to actually sign up
So when it comes to our investment decision, there are of course a lot of criteria, but right now a key thing what we're looking for is novel tech. That means, especially there is a big problem in crypto space. A lot of founders are just forking projects. That means if you see a DeFi lending protocol on Solana, next day they're building one on Sui or they're building on Aptos. So if it's not a novel tech, we're not going to be investing. So that's number one. And trust me, there are too many copycats. Number two is previous founders' experience in specific industry they're building at. Again, the issues with crypto, you hear too many stories of 18-year-olds becoming rich overnight or people buying crypto early that everyone thinks that you come in, you have no prior experience, you can make $1 billion business. Well, maybe that could have been a case in 2016, 17, but unfortunately you were like almost 10 years late. So we are looking for someone who has a specific know-how in that industry. Number three is if you're an early stage company, you probably don't have any traction. So what we're looking into is industry connections of how you're gonna utilize that money once you're gonna raise to basically go to market. Because right now, crypto space is very, very expensive, especially when it comes to marketing. And right now we're looking for projects that are not targeting Web3 space because Web3 space is very spoiled. Like influencers cost enormous amount of money. Any kind of sponsorship and event cost crazy amounts. So we're looking for strategies on how they're going to bring their user base from Web2. And the other thing is, as we're investing mostly in tokens, is tokenomics. And here we have this running joke of questioning what is the business model? Is the business model the product or the business model is the token? Because a lot of projects think that they're gonna just pump the token and that's it. But they're building some sort of B2B play where the token is not even needed. So the token needs to be integral part of whatever product they're building, and there needs to be an utility. And DAO or voting rights or payments is not a utility, so it has to really need it. And unfortunately, right now in crypto, I would say only 10 to 50% of companies that are live actually need a token. Majority of them just have it as an added value for founders to cash out and bring more liquidity.
Thank you, Laura. Let's get the Chief Growth Officer, Chris, back on and say, can you share some examples of how you've helped your customers leverage AI, enhanced or elevated their revenues?
Yeah, I mean, a lot of institutions, it's all about incrementality, right? And what we're finding is across the globe, as banks are going through digital transformation, they're starting to pick common tech stacks. And there's a benefit and also a challenge with that. When you each have the similar CRM system, similar core banking technology, and similar products, the only thing that differentiates you is your experience with your customer, and then how you can iterate and develop new financial products that meet the needs of your customer base. And so you mentioned the phrase rip and replace earlier. That's a very important thing to understand, is that nowadays with technology, you can be an abstraction layer on top of existing technology that exists inside an ecosystem, and you can abstract the data and develop a way to create more nimbleness for an organization that may have, a 60-year-old COBOL database, a modern Microsoft Dynamics or Salesforce system. Those sorts of data repositories, you can abstract all of that data together, orchestrate it, and then use it in modeling to start to drive right product, personalization of product, and you don't surface product like banks have traditionally thought to surface a product. It's not about a marketing campaign and pushing a loan product or a credit card product in front of a consumer. It's about understanding what their real-time behavior is and prompting a user that is contextually relevant. So when they have a large purchase, you can prompt them in real time to see if a buy now, pay later product or a short-term loan product makes sense in the moment, versus trying to promote a buy now, pay later solution and you're waiting for the customer to then proactively come to you. That's what you can use modeling for. And you can use intelligence and engines to start to surface that in real time. It does two things. It reduces the operational load in the business because you can't scale that over 10 million customers and billions of transaction records. And so it makes the institution more efficient. And the byproduct of that is they're driving revenue at the right time with the right customer. And I think that's the perfect intersection of those worlds.
Thank you, Chris.
I guess I have a follow-up question to you on that. When you're basically doing the implementation with the banks, what's generally the time period you've seen for the implementation?
Of a solution?
Yeah, in general.
Usually the challenge is their ability to tap into their data. The thing that I hear the most common around the world is we're sitting on lots of data, we have lots of ideas, I don't know how to bridge those two things because it's too challenging. And so getting access to data can be a short period of time, but it's one thing about modeling today is a lot of modeling is rendered in a UI of a dashboard. Once you have insight, you need to action insight as quickly as possible. And so the implementation is really about a workflow. It's about connect the data, enable experience design, and then deploy that experience in channel. So through an SDK or a web SDK so that you can, in real time, create that scenario. That's probably the most nimble bank is a 12-week period. The average bank is like a 6 to 8 month period. But procurement is longer than implementation.
That's really optimistic, 6 to 8 months.
Yeah, that's in a highly engaged
in
bank.
our region,
right?
it's a separate
That's fast,
ballgame.
right? So one of our portfolio companies, we were talking about this as well. So what Chris's company does, our other AI company would take that data and actually use it to make those phone calls, AI generative voice calls to the customers as well. Our experience in Southeast Asia and Middle East so far, 12 to 18 months for a bank.
Implementation.
Implementation.
Yeah, what we see.
And that's on a good day.
Yeah, in North America, we see procurement process. So you can get the business engaged, then you go through the risk mitigation of a bank procurement process, security regulation, maybe compliance, you have an outside auditor, all of these things. That is a 9 to 18 month process, and then you get into implementation.
So I think there should be a
Then you
separate
get into
session on
implementation.
this,
Yeah.
that mastering procurement using AI blockchain ML
That's it.
application.
That's $1 billion idea.
If someone is
right
building that, we're investing.
And in theory, you could use blockchain for that, right? Because the applications of something like blockchain is about the provenance of something. And so when you're using it for anti-money laundering or fraud detection or any sort of fraudulent activity in a bank, that's a great use case. Another aspect of that is reducing some of the burden on the manual processes because procurement's whole job is to mitigate risk. And if you can mitigate risk by having the provenance of data through a blockchain scenario, you can actually build a really big business around enterprise procurement.
Good, yeah. So let's bring Namir back in to talk about acceptance in ESG with tokenization. What's going on in that ecosystem?
Yeah, so I think it's a humongous opportunity when it comes to ESG itself in our specific market over here. After the Trump's, when the US backed out of the green transition, it opened up a humongous opportunity for this part of the region, and they've jumped onto it extremely well. With the only regulated exchange in the region over here, we have Saudi Voluntary Carbon Market Company as well. So the region has really taken a lead in that. The market is expected to be hitting $100 billion by 2030. So right now the market stands at around $4 billion, so that's 9.6x growth that you see in almost 5 years from now. When it comes to the tokenization piece, you've got to look at the indicators where the market is going towards. A small indicator would be, let's not talk about tokenization. I would say where the ESG market is going is, if you pick up VARA, the Virtual Asset Regulatory Authority had introduced the voluntary emissions reporting. That's for a reason it's voluntary at this point of time, which eventually, where I predict it becomes mandatory for certain organizations who qualify for a certain tier to start, reporting their, ESGs as well in the emissions. So that's one area that we're looking at, opportunity. The second opportunity that we have seen is right now in the carbon market space, where the market is going to hit $100 billion by 2030. The demand is there, and so is the supply, but you're not able to materialize that. And the reason is that it's too hard for SMEs and even normal corporates to enter into the market. The minimum cost of entry into the market is, making a purchase of almost 10,000 tons, and 1 ton is right now almost approximately $7, right? A good quality of credit. So you can imagine the minimum entry is too high. So how do you break it down? This is where tokenization comes into play, where you fractionalize the carbon credits, make it a lot more easier for corporates to have access to it. On top of that, the reason why it's important is that this way it actually eliminates the issue of double counting in the system. And that's where the use case, some of the fintechs, including ours, we have leveraged the use of NFTs, we have leveraged the use of NFTs in a way that we have issued it for some of the banks, so that once they have offsetted something of bought carbon credits, it has been taken off the shelf completely and it's recorded on the system. So these are the areas where we see ESG really leveraging, I would say, blockchain and AI. And AI is also being used in when it comes to emissions reporting for transaction monitoring. So all transactions are linked to emissions itself, be that retail transactions or corporate transactions, from $1 transactions to a $1 million transaction. All of these transactions are being monitored by using AI data sets of different sorts to be able to understand the emissions against the transactions.
Funny enough, I'm going to go back to my team. We monitor 80 billion transactions every year.
Yeah.
I don't know if you heard about the UPI, India's biggest payment. We monitor every transaction, okay? Similarly with some of the banks in Africa. Now, leveraging out an ecosystem with AI and blockchain, and then I'm going to land in Laura's door and say, okay, I think there's a new technology which needs your
There's
support.
scale,
Yeah.
there's use case,
Yes.
and then you just need balance sheet.
And coming back to you, Duran.
Yeah.
Now, you've been investing across multiple sectors, territories, technologies. How are you bridging the gap or identifying the gap between what is genuinely going to be the next big thing, and what are you, as you talk yourself as a head of investments, how do you put your money where your mouth is and say, we know these guys are not 100%, nobody can, everybody pivots. How do you add value to the next big thing?
Thank you. Now, well, the easier way to answer this question is not just as my current head of investments role, but my overall thesis of what I've been building since I left banking and went into investing. That included my 10 years of private equity that I'm still a partner of. I still have carried there. What I've been doing on a personal level as well as an angel investor, and what I'm doing with this family office and other syndicate members that I have as well who co-invest with us. The simple thesis is, because I'm PE trained, we invest, whether it's early stage or late stage, we invest in VC like PE. We refrain from the model of spray and pray because one, is not sustainable. You need a massive sort of team just to predict the idea that these are the ones that are going to pick up down the line. We like going very deep with the founders. We like understanding what so everyone can identify good opportunities. But within them, if you had to pick two, if I put a gun to your head and say, hey, we can't do all 10, let's do 2. Saying no is the most difficult part. So the team and I have kind of worked on that long enough that we understand how to say no. And then when we do say yes to the last few, then we go deep. 70% of our time is spent on revenue generation for our portfolio companies. 30% is spent on finding out newer opportunities, and usually through our own syndicate they come in.
Got it.
So you kind of spend more time cleansing them than anything else, than searching for them. In that 70%, then because each one comes from a different sector and subsector, we relate to it directly. Like if I'm banking or XPE and I've worked on FMCG, then if a founder's coming up with a disruptive idea just to break that market, easy peasy, that'll come straight to me. Someone else sits on healthcare, someone else sits on deep tech. So we spend a lot of time with the founders, almost like co-founders, and help the revenue increase and scale up.
What's the time frame? How much time do you invest?
So typically, this is VC like PE and really trying to ramp up ARR. So we don't look at this as a 10-year product. We look at these literally as 3 to 5 year products. I wouldn't say we get it at an early stage or as a startup level, but at scale-up level, not yet growth equity, you can take 3 to 5 years and be successful. So far, alhamdulillah, touch wood, we've had 2 zeros, but 11 ups.
Inshallah.
So that's a very good ratio compared to 1 and 8 that typical
No,
VC does.
I
so.
think I'm looking at Laura sending me signals like get me in right now. So talk to me about the micro signals.
Mute Laura, please.
Laura.
No, I mean, if you're having such a hard time saying no, I can give you some tips. Because for us, saying no is much easier than saying yes. In our venture fund, when it comes to looking at the investments, actually, we probably say no to like 95% of companies that go through us, because as we are associated with the exchange, we see a lot of projects. We get probably one of the top deal flows in the space as other exchange. We just know what's happening. And we have the data from the listings as well as from all our BDs. So saying yes is very, very hard because you just see too many similar projects that in the end don't do well. And looking at founders' conviction is definitely the most important thing. And recently did this LinkedIn post that got quite viral. I think I got like 2,000 likes or something. And I got, during 3 days, I kid you not, I got more than 100 emails, just emails with pitches, 100 emails. And out of these 100 emails, I scheduled only 3 calls. And I genuinely spent my time going through every one of email, looking into a company and even responding. Of course, I used ChatGPT to help me craft the responses because it was just too much, but 100 emails from just one post.
That's a lot.
It's insane.
So normally what would you say your conversion rate is? Under 10%?
Less, even less, I would say like around 5% probably at best. Because just we have such a huge deal flow. That's the thing. We just have so many companies, and we have 4 in-house analysts, basically, and I think that's not even enough for us.
This is an early stage anyways, right? So, and because it's crypto focused, they will get a lot of that.
Yeah.
So, Chris, talk to us about your biggest challenges, what you faced with your customers, especially in the banking ecosystem, with the thought process.
Yeah, that's a big question. There's a lot. What I've started to see is that as banks have transitioned to meet the needs of their customers, which are going digital, their main access point with most of their customers through an app or a web experience. The challenge is all of the constituents that are in the bank are trying to talk to the same customer. And we're getting to a point where there's a lot of disruptive messaging from the bank that's going directly to the customer. And it's about trying to prioritize and understand the value of the message for the customer. And a lot of institutions are really starting to think through, you can have all the data models that you want, but the larger the bank, the more products that a customer has with a bank, the more that each group is trying to upsell and cross-sell that customer. And so the biggest challenge is in the sequencing of messaging and using modeling in the background to prioritize the value of a message and the product that the message is related to and surfacing it in the right channel at the right time. It's not about putting a message in front of a customer. It's about putting a message in front of a customer at the moment that matters the most. And so you're using real-time transaction data to surface it in real time. So you're surfacing an offer to stimulate a card purchase when they're potentially out of the country. So you're stimulating cross-border spend with a card, which is higher interchange, which is more profitable, but you're surfacing it in a way that creates more value for the customer. And that's what a bank is really struggling with today, is trying to mitigate the inundation of everybody's requests that are trying to get to the same customer to grow their portion of the bank's business. And so that's the core challenge. Then you back that into how are you going to use data to enable that sort of sequencing and create efficiency in the institution overall.
So I'll give you a real-time problem statement. We'll see if we can actually, as we get to the end of it, we'll see if we can see some action, as you say. We have insights, now we'll see if we get some action from you. I integrate in one of the biggest banks in Africa, 145 applications. I get their command center, the technology team, see every data that goes through all their POS machines, their requests on any of the ATMs, transactions, everything. So ideally, they probably run approximately 1 to 1.5 trillion transactions per day, right? If you include, if you include all the, when that particular data passes through multiple channels in order to get to the core banking, and it traverses back to the customer. No human can see it. So we now give them insights as a dashboard, right? Now, as you say, there is still work that needs to be done by people like you, like Namir, Durrani and myself, now trying to make value out of that data. So that's where it is. Now, here is a challenge, because the gap here is not that they cannot make that decision. One, there are too many decisions to make. And two, not everybody is educated enough to understand the quick turn of technologies that's happening and more complications coming into the bank. How do you think Flybits can come in and make that change?
Yeah, I think the biggest thing is you need to create a workflow between data insight and then actioning it in real time. And one of the key things is to change the mental model that exists inside a bank. A bank today thinks like a campaign.
Another dinosaur.
So an idea is thought of, they'll do a batch pull of data, they'll pull a customer list, they'll get a segmentation, they'll run an effort against that segmentation list. That gap right there is probably a good bank, 60 days, 75 days. So it's not real-time data that you're pulling in that sense. And so you have to enable a workflow. You need data connectors that will create efficiency. So it's just pulling the delta, or it's just pulling the trigger in which you need. And then you're connecting it to an experience that's designed and a channel to enable that.
Got it.
And that's what creates automation in the bank. And that's how you create scale over 10 million customers and billions of transactions.
But still,
I can back him up.
Yeah, okay,
With an example.
then I have to fight with both of you. But still, it's near real-time data. Now, if you translate that into my ecosystem in a bank which is doing fraud analytics, which I do again, it's real-time.
Yep.
There's a gap.
Right.
So this is where I'm saying fintechs, like how Laura was talking about, anything to do with new technologies that come in and plug that small piece is where we are going to be successful as a team.
Yep.
So
I just want to make a very quick note. You know, you were saying now like 60 days, and I'm like, I worked my whole life only with like fintech startups. Some of them became unicorns later. It's just, I can't even fathom the idea that there's so many different data sets that you don't even have. Whereas my background was marketing, and I did a lot of marketing campaigns for some of the very, very large fintechs, we'd get data instantly. We would send an email campaign, we'd see what's the conversion, and it's just, I can't even fathom that.
Yeah, it's the difference between proactively wanting to target a segment and actually pulling the real segment from inside the business, and that's normally what the lag component of that is. And then in some cases, depending on where the data sits, the performance of that campaign is not relayed in real time either. And so there can be a 9-month window between pulling a batch file that's a customer segment, deploying a campaign, seeing it perform, and then getting the detail back from the business to determine how many credit card applications came in. That window is too long. And that's when agentic AI, which is being worked on in labs today, is autonomous decision making with an AI. But we're a while away from that in the banking space.
So I'll give a quick example of
Please.
a good bank that has a leadership level push for this. So it requires leadership level push. DBS Singapore.
Yeah.
DBS Singapore looked at Domino's Pizza. Domino's Pizza became the most innovative company in the world in, I think, 2017 or something, because they did one-click ordering. One click. So HSBC,
let me surprise you.
I calculated 14 clicks to pay my utility bill. DBS says we're going to do that one-click utility bill.
So any orders that happen on Domino's is monitored by a company which, so we implemented the technology. It's not ours, but again, as you said, we run a partner network. Yeah, so I think we're coming to the end of the day. So I want to give each of the panelists a kind of a takeaway for the rest of the world, because everything is recorded right now. So starting from you, how do you see your ecosystem, which you are most passionate about, change the dynamics between what we are living today to the next generation?
Tough question. Well,
No, he told me to ask you this.
As an investor, it's an easy question, right? So from one perspective, because we could easily dump it all on the next generation, let them figure it out. And all that. But we, like I mentioned before, we're sitting on that cusp where things are about to be different. We're about to go from analog to digital, or equivalent of that in the current scenario. Within our power, what we have to make sure that we don't take the easy way out. We don't say, hey, this is how systems work, this is the way it is, this is the way the banking works. I must back the big bank because they're the ones who were trusted during the financial crisis, even though we know our tax dollars paid for it. But let's not blame right now. We have to take the brave decision. If I have a choice between opting for two or deploying my check to company A or company B, company A is the safe bet, but company B is the brave bet with an underlying ethos. Let's start by taking the brave bets.
Risk taker?
Yes.
Next. What about you? What's your takeaway for today for us?
I think the region is perfectly aligned for the MENA region in specific. Adoption of AI that's going large. Around the contribution towards the GDP of the MENA region by 2030 just by AI is going to be $320 billion. So that's a sizable amount. Second is the region is also big on blockchain. Third, the region is going big on climate. So I see that as a tri-bid model where these three events synergize, they create strong economic model, correct? In terms of the fintech sector, the strong areas of growth that we have seen in terms of my personal conversations as well, where some of the largest financial institutions entering now into the market are looking at wealth and capital very closely. So we have reached that stage. So wealth, capital, and second for me would be corporate banking. So any fintech that is entering, so we have seen the boom of fintechs in retail, in B2C. Now is the time that I see for corporate banking disruption. And second, as I mentioned to you, corporate banking. And the second one was, of course, the adoption of the tri-bid model as well. That's going to go big.
Got it. Chris?
I think in the ecosystem that I'm in, there's something called the hype curve. It's from Gartner. There's the hype and then there's the trough of disillusionment, which is kind of the summer and the winter of technology as it starts to evolve. AI and all of the applications that we've talked about today all have those flows. They're just happening a lot faster, right? It's not months and years, it's weeks in some cases. And it's important to know that the application of data and the value you provide to the business and your customer is not a straight line up. And so what you have to do is just start now. The banks or the institutions that have been trying to put their data in data warehouses or repositories or modernizing their technology so they can access their data are the ones that are going to thrive now. The ones that have been late in doing that are the ones that are going to struggle. And so the whole point is you just need to start and you need to not get caught up in the hype curve. It's really about crawl, walk, run. How can you apply things that can improve the workflow and the productivity of the business today? A lot of the applications of data is actually internally in the business. It's not customer facing. But to your point, there's a ton of opportunity in wealth management, in capital markets, in areas where there's a mass amount of data and it's being underutilized in the workflow of how you can modernize that ecosystem. The day-to-day banking piece is probably the front end of that curve. Capital markets and wealth management is probably the laggard right now that I'm seeing anyway.
Thank you. Just before we end the session with Princess here, I want to come back to you for one question. This has been going on in the mind. Cross-border payments without the involvement of a bank or a settlement system. Possible, not possible?
It's possible, but it's not ideal, just because of the alternate industries that exist, the dark industries. So there are. We have Hundi Hawala, we have crypto as well.
Digital assets regulated.
No, he means outside of the banking circuit.
Cross-border.
Cross-border, outside banking circuit, outside regulatory circuit. Of course it's possible. It's been possible for centuries of years.
So, not legally, but because
Legally,
what's happening
no.
right
You have to go through a regulated channel. It can't be. You can't. It's a much larger question. We can go into the deeper.
We'll have
You
another
can't.
session.
Just, the short answer is you can't leave it to the ethics of a third party to decide whether something is allowed or not.
Can AI solve the problem?
AI
with-
can predict. AI cannot take an intuitive decision so far.
In any case, you need regulations.
Thank you. Laura, we start with you. We like to finish with you. So it's all yours.
So, you asked this question, I was listening to everyone's answers, and basically we're talking about innovation, these new projects being built, new fintechs, trying to take over like legacy banks. But I'm sitting here, I'm listening, and I'm thinking, right now, all the markets are crashing down, basically, and probably it's going to be even worse upcoming couple of months. And there is still too many projects that are depending on the good market sentiment, because innovation itself is luxury.
Yeah.
Companies invest in that when their balance sheets are good, they're not in a survival mode. And right now, we probably are entering a survival mode.
Yeah.
Even us at the fund, we're now not only thinking about where to invest, and today our GP said a very, very good thing. We're now exiting high-risk investment mode. We're entering yield and wealth preservation mode,
Perfect. Yeah.
basically. So my kind of takeaway from all of this, what we're discussing, and something for everyone here to take home is, how can you build a business that is least as possible depending on what is happening in financial markets right now? How can you create a business this way?
Especially don't hear Trump. Right, guys, thank you very much. Quick round of applause for the panelists, please. Thank you. Appreciate it.